Good morning. I'm Mehdi Sandich, and welcome to OETV's Crypto Dome. We are back with Adam Blumberg, co-founder at Interaxis. Adam, how are you, mate?
I'm doing well, Mehdi. Good to see you on a Wednesday morning here. Talk a little crypto.
Wednesday morning, talking some crypto. As yeah, it is what it is. That's the time we do it. There's I don't know. There's been some ups and downs in crypto as usual. Nothing crazy. I'm not going to write home about it, but there's been some decent news along the way as well. I feel like this is like a recurrence of last week where there was less exciting price action, but more exciting news flow.
That's right. Well, that's what I like, right? I want people that are actually using the system. I want to see more news like that and less news around volatility and those kinds of that kind of price action. Obviously, I'd love the bullish price action. I'd love for us to talk one day about how Bitcoin went up $10,000 this week. But for right now, you know what? I'm pretty happy with just having news around people building and adopting crypto.
I agree, and I think we'll have that conversation soon enough. Maybe around Christmas, everyone will get a nice little Christmas present as we come out this crypto winter.
I hope so.
Yeah, let's kick off with some politics, shall we?
Of
Because
course, I love
it seems to be
politics, and
the conversation du jour. So why
yeah,
not?
well, it's that time of year. I went and voted this week, so let's talk about it.
Oh, I might be able to vote for the first time this year as well. So we're all on board.
Congrats, welcome. So it's all going to be your fault.
It's all going to be my fault. That's what my wife said. I'm just going to negate everything my wife does. That's to start arguments in the house. It's the only reason I got the citizenship. So yeah, politics. Well, this was an interesting one. Grayscale did a survey, a national survey, where about the future of crypto and the adoption and how people are seeing crypto as part of the finance side, whether it become part of their portfolios and such. And had some very good, interesting results that came out of it. One of which where 53% of Americans agreed that cryptocurrencies are the future of finance. More interestingly, a couple of other statements that came out were that 59% of Democrats and 52% of Republicans, I'm not sure that all adds up, but either way, both sides have a majority in this argument, are completely on board and supportive of cryptocurrencies. So, yeah, this has got to be good for no matter what happens with the leadership, if it changes, doesn't change over the next couple of years, how we see things.
I think what this poll showed us is that one, Americans are thinking about it, right? It's something that's not a fad. It's not something that's probably going to go away anytime soon, because it showed us that it's interesting for Americans. It showed us that the younger people who are voters, obviously, are using crypto. They're very disenchanted with the current financial system. They're disenchanted with equities and bonds and such. And they're saying, we want a new way to, a new financial system, basically. We want something different to invest in. Now, you and I both know that they're probably thinking more in terms of, I want to buy Dogecoin and hope it goes up 10x than I want to be a part of decentralized finance. But we're getting there, right? It's this idea of adoption. And if you look, Mehdi, some of the more interesting numbers there are the number of minorities who are interested in crypto, the number of lower income people that are interested in crypto. Those kinds of numbers kind of stick out because you go, that's exactly what it was meant for.
And now, see, I agree, that's interesting, but I also wasn't surprised by seeing minorities being more engaged and more accepting of crypto, because a lot of the time the countries that they're originally from have shown some adoption of crypto because their existing fiat currencies are too volatile, just in a bit of a mess overall. And this is bringing some more firmer stability on a global level for them to be able to transact versus just being stuck in their own little fiat universe.
Right. And there's a lack of trust for the most part among minorities of the current financial system in the United States, thinking that this is the system that is built for the people that are already wealthy. It's built for the majority. And so when you have a new system come in that is not part of that old financial system, it naturally the people who don't trust the old system are going to gravitate there. But the nice thing about this poll is it also shows probably those that are running for office, those that are legislators and regulators. This is something that's important. As you said, some percentage of Democrats and some percentage of Republicans say they are I guess, for crypto. So they're not totally against it. I'm not quite sure what that means. I'm not quite sure that means they want this, whole new ecosystem to run, or if that means, yeah, we like Bitcoin and we'll throw 1,000 regulations around all this to make sure that people are protected. I'm not sure what it means. It does say in this poll that the regulators say that protecting consumer interest, protecting consumer investors was their, I think, number one priority when it comes to crypto.
Which, yeah, it's understandable. I get that. And that's kind of been the topic of conversation over several weeks and months with us as well, that's what the regulators and the government's looking at doing, as they should be. That's their role and good for them. But it's, what we don't want is a carte blanche slicing and dicing of, right, we're anti this, it's out. And I feel we're getting past that point. So let's now get to the point of actually offering some structure and regulation that everyone can live with. But we'll get there at some point.
Yeah, but I think it's a nice poll, and I don't know exactly how polling is done. I'm not an expert on statistics or anything like that, but it seems nice to know that more and more people are thinking of crypto, more and more people are utilizing it and trying to adopt it, and they come from both sides of the aisle. And this, my understanding is both sides of voters, kind of equally determining that this is something that's going to stay. We want some better regulation around it so that we can feel comfortable utilizing it, adopting it, investing in it, all of those things.
Perfect. And we'll see if that actually makes its way up the ranks and the powers that be actually start taking note of what the people are saying.
Yep, I hope so.
Away from Bitcoin for a little bit. I know we had our touches on ETH going into the merge and such, but ETH has kind of had a nice little run over the last week, 10 days. It's obviously back to being a little bit subdued in the midst of what everyone's calling the crypto winter. But there was a significant move, which was noticeable, and I can't believe I'm going to. I'm going to mention Raoul Pal. He has obviously a pretty active show that he touches on crypto quite regularly, and more often than not he does. He made a big claim, which kind of struck me. He's claiming that Ethereum has the most bullish price chart in the world. Now, I know these are headline grabbing claims, but what are you seeing? Do you see anything to kind of substantiate that type of claim, or is this just a headline grabber?
I'm not quite sure if I see that. Of course, I'm not great as a trader. I can look at charts and kind of tell you what I think is going on. And what he was mentioning was more the ETH Bitcoin chart, right? How much ETH there is, or the value of ETH as it relates to Bitcoin. And what he's saying is that's a chart where the ETH to Bitcoin ratio is at a point where if it breaks out of this triangle, if it breaks past a certain resistance level, it could shoot up quite a bit. And that means that even if Bitcoin holds its value, we could see ETH in the $2,200 to $2,300 range relatively quickly. And the reason why ETH BTC is important is because there's kind of, as of now, this certain amount of money in the world being devoted to crypto. So, and most of it going to Bitcoin, and then the next amount obviously going to ETH. And so the ETH BTC ratio is important because that shows us that either more people are choosing ETH over Bitcoin if they're going to make those kind of large investments, or just swapping out their Bitcoin for ETH. And that's kind of important because that's a move forward potentially in not necessarily having ETH and Bitcoin in lockstep, moving up and moving down together. So if ETH can kind of break out of that, maybe we get this time where they're not necessarily as correlated as they have been, and we can see the value of ETH and the value of Bitcoin kind of move a little bit more independently of each other based on the merits, based on the value of the actual cryptocurrency.
And just for people who may, if we had some first-time viewers and such, in one sentence, like, how would you clarify the difference at looking at ETH versus Bitcoin?
Okay, so Bitcoin, the main value is, we always say it's like digital gold. We know exactly how much Bitcoin there is in the world and how much there will ever be, and we know where it is. And therefore, if we have more dollars in the world and the same amount of Bitcoin, the idea is the value of Bitcoin should go up. That's pretty much the point right there. It's a store of value. The valuation or the idea of the valuation of ETH is severalfold. One, ETH is kind of a utility, because if I want to run transactions on the Ethereum network, meaning if I want to participate in decentralized finance, and I know we're going to get to a story, pretty exciting DeFi story later. If I want to participate in decentralized finance, I have to own ETH. It gets converted to what's called gas to make the transactions run. So ETH in that respect is more of a it's more of a utility. It's more like gas. It's more like oil than it is gold. So ETH is kind of like oil. Bitcoin's kind of like gold.
Fantastic. And for the regulators, you'll notice that Adam referred to them and cross-referenced them both with commodities. Now, what about Dogecoin? How do you evaluate the value of a Dogecoin?
I don't.
Okay.
I don't generally. I think the value of Dogecoin is correlated almost 1-to-1 with Elon Musk tweets.
Oh, you blew up my next story.
Oh,
Just coming into that. Come on, Adam. So obviously, over the last week, Elon Musk has become chief twit at Twitter. He's the CEO, and he's been making quite a few changes there, and I believe will continue to do so. That's been maintaining the headlines quite aggressively over the last several days as we see things unfold there. And Dogecoin has been a beneficiary of this somehow. Dogecoin's up over 100% in the last 7 days. And do you feel that this is, there's some merit to an integration of Dogecoin into the Twitter universe? Because I'm assuming that's what the assumption is.
Right. And well, it's less of an assumption, because Elon Musk actually sent out a tweet that had a picture of a Shiba Inu dog wearing a Twitter t-shirt. So I think that's when one of the larger runs in Dogecoin started recently in the last couple of days. Is Elon Musk actually tweeted that, which goes to my assertion that the value of Dogecoin is correlated directly with Elon Musk tweets. So like if they've already said they want to integrate crypto and payments. Binance, was part of the investment that Elon Musk made with $500 million. There's going to be some sort of payments integration. It's likely going to involve crypto. And he seems to like Dogecoin. The nice part about Dogecoin, if there is a nice part, is there are so many of them that you're not really worried about. It's not like Bitcoin, where there's only 21 million. There's going to be trillions of Dogecoin. So that's not a worry. You can use the Dogecoin network, if you want to call it that, to actually facilitate transactions back and forth. As a matter of fact, last year, Mark Cuban said Dogecoin wouldn't actually be bad for payments because it shouldn't be that volatile an asset. I mean, obviously, we've seen it recently with a lot of speculation, but the fact that there are so many of them and it can transact so quickly means we should be able to use it relatively easily for payments. So,
and it's cheap to utilize as well. So you can go buy a coffee and not worry about spending $15 on transaction fees.
Exactly. So you could see where it'd be relatively easy for Twitter to, integrate Dogecoin and say, look, if I'm going to pay you, if you're selling something on Twitter, I don't know how they're going to integrate payments, but I need to pay you for something and I'm going to use your Twitter handle to do it. It would be really easy it'd probably be pretty easy to integrate Dogecoin. Integrating something on Ethereum is going to be a lot harder. Integrating Bitcoin is going to be harder. You're going to have to use Lightning Network, which Twitter's already tried before. So integrating Dogecoin is probably easy. And believe me, any engineers that are working on Dogecoin will absolutely fall over themselves to go integrate with Twitter.
Makes sense. Well, we'll keep watching. We'll see what pans out from the tweets that will, I'm sure, come in the near future. BitMEX. So BitMEX cut part of their workforce. Their CEO left. We're seeing more and more consolidation, some more layoffs, and this is obviously bringing a lot more concerns into the sector. Right, we're seeing it not just in crypto finance. We're also seeing it in traditional finance. We're seeing it across the economy. Right. Do you think that in a time where we're seeing this type of grand layoff and resizing of across the business world, does this put some more concerns on something like crypto, which is obviously a newer entrant into the universe? And does that raise red flags for its viability for the future?
I don't know if it if it really raises any red flags. I mean, we're seeing layoffs at crypto firms across the board. DCG, which is Digital Currency Group, which is a absolute behemoth in the crypto world. I just saw laid off 10% of its staff, and they're a monster. They're by far the biggest investor in the crypto ecosystem. So it's kind of affecting everybody. And I think a lot of it is there was so much buildup. There was so much hiring that went on last year with this big run up when everyone thought, maybe Bitcoin might get back down to 40,000 and stop there. And there was just an immense amount of hiring, and people thought everything would always go up. And what we're learning now is maybe some of those businesses, hired too quickly. Maybe they, didn't take care of their treasury like they should have. Maybe they didn't, watch their cash flows as well as they should have. There were some risk management issues going on. But what it really tells us is they're kind of just like any other business, right? When the economy's bad, when things are rough, they start having to lay people off. Most of them are real businesses. And when there's not enough money coming in, and there's not the ability to go out and get other investors, because remember, up until recently, Mehdi, a lot of these companies could just go get more investment, right? They could just go to other VCs or go to other investors and raise, round 4, round 5, or round 6 at higher valuations. And we're not seeing that right now. So, the other option is we start letting go of headcount.
It's unfortunate, but I guess it's a part of the necessities of the world and the cycle of business.
It's part of a lot of the people that, keep in mind. I'm not saying all of them. Many of the people that are running these crypto companies are relatively young and not quite as experienced in running a business. And so, a lot of them I know, and I know several of them got caught up in the euphoria last year, and we're hiring people, and we need to scale and everything. And we have plenty of money because we raised and we have our own token and we can pay people in that. And now they're going, oh, well, our token is not worth very much. We have all these people. We're not quite sure what they do. We don't really have a market anymore because no one's adopting or no one's buying as quickly as they were. So they're having to start laying people off because there's not the funding available anymore.
All right. So on that somber note, let's switch to something super exciting. And I think this has been the most exciting piece of news this week, I feel like. We saw in Singapore that they had their first industry pilot for digital asset and decentralized finance. It included some big names like DBS, JP Morgan, and SBI. They conducted some of the business, like some of the things they've done is so cool. They even conducted like a live tokenized cross-currency transaction.
Right.
Run us through this, because this is very, very
and it's important, because I had to really read through this and figure out why it was so important and live and revolutionary and stuff. Because at first glance, it's JP Morgan among a couple of DBS and I think Standard Chartered.
SBI.
What? Excuse me?
SBI.
SBI. Okay. They completed a DeFi transaction. I thought, well, I've completed thousands of DeFi transactions. Why you're so late and you're going to make a big deal out of it? But what they really did was, keep in mind, when banks, when banks transact with other banks, there has to be some KYC, know your customer, in there. There has to be some idea of knowing who you're participating with. So that's a big deal, because banks can't just jump into decentralized finance pools and start lending and borrowing like we think or we hope they can, because you don't know who else is in those pools. And the last thing that a bank like JP Morgan wants is to know that they participate in a pool with terrorists or with criminals or something, all in the same pool. So there has to be a whole lot of identity going on, KYC, knowing who the other parties are in the pool. So that was a big piece of it, is they created like this digital identity that said that we can see on chain. Now, this is really important, because most of us think, okay, if there's a digital identity, then everyone's going to know who I am. I don't want everyone on the Ethereum blockchain to know who I am. But there's a technology that they use called zero knowledge proofs, which, by the way, they did not use in this case because it would have taken them too long to integrate. But there are these technologies that say, I create my identity on chain, okay, which knows who I am. It knows, how much money I make, all of these things. However, Mehdi, when you want to transact with me, all you're checking to see is, do I check certain boxes? You say, I need to transact with someone who is a US citizen and makes a certain amount of money and, you know, lives in a certain state. And the transaction from your side is just checking, is just looking at my identity and saying, did Adam check the boxes? But you have no idea who I actually am. Okay, all you know is I've passed this verification. And that's one of the big parts of this story, is they created this online identity for businesses to be able to transact with each other and do so safely and securely and compliantly. And then the next part is they created tokenized versions of I believe the yen, is that correct?
Yeah.
And the Hong Kong dollar.
Oh, Singapore dollar.
Singapore dollar. The Singapore dollar and the yen. They created tokenized versions, so on-chain versions of these of these currencies, and actually did a live transaction of those currencies. And so where that gets us is eventually there will be pools of digitized yen and pools of digitized dollars and pools of digitized other instruments that these banks, these institutions are able to trade and settle immediately. Remember, there's instant settlement when they do this. This is not T+2 or T+3. This is settle in 13 seconds. And that's going to be pretty revolutionary. And the fact that large banks like this did this and took the time and effort to do everything correctly and compliantly, but in a way that they can still use decentralized finance. They used a fork of Aave protocol, which is one of my favorites. Aave has something called ARC, which is specifically for institutions like this. So they took some of the Aave protocol code. They wrote some of their own code. They used some, you know, identity protocols, and were able to create this whole system. And I know it was only one transaction. And again, I looked at it and I go, I do thousands of transactions. I know people who do millions of them. What's the big deal? But then you realize, oh, once they've done one, now they can do them all day. Yeah. Right? They figured out how to do one. That means they can just keep doing them all the time. And if we go all the way back to our friend Raoul Pal and talking about Ethereum, he's just looking at the chart. What I look at is if JP Morgan and DBS, sorry, too many letters, and DBS and SBI and all of those are transacting on the Ethereum chain, that means that that's just billions of dollars in more adoption, in more use cases, and more transactions going over that network, which to me means more demand for ETH.
Let's go. Let's bring it. Adam, what a great way to wrap today's show on something so positive and so enlightening in this industry. So, you know, I'm looking forward to much more of this. And, you know, I'll take the quietness and the volatility of the price action while this is all going on to get us, you know, slowly grinding higher in the right direction.
I will definitely take some quiet periods in the price if it means that everyone's, you know, back there building and learning how to use it.
That's it. Adam, I want to thank you as always for sharing your thoughts and your time, my friend.
All right. You're welcome. Thanks for having me.
Everyone watching, thank you for watching and good luck investing.